Thank you for that. So now let's move on to the next topic, which I think is very interesting. And it's interesting because the environment doesn't look like it's a battleground, if I can use that. The economy doesn't look interesting or attractive enough. And I know you have people like Warren Buffett that will say, when everybody is running is when you should stay. When everybody's trying to take a flight is when you should stay back and put your money down. So you have inflation rates off the roof. It's obviously, I sometimes feel it's higher than the NBS report actually displays. You have unemployment rates 33%. That's no joke. That's one of the highest numbers on the continent. In the midst of all of this, what are the opportunities? What are the opportunities either as an investor, or what are the opportunities even for the everyday entrepreneur? So now we're talking about the viable investment opportunities amidst high inflation. Philip, I'm going to throw this back at you. So now,
Oh, okay, that's fine. That's fine. But just a bit of background. Inflation has been on the increase. And I think it's currently around 17.33%.
yeah,
Even if within a month it's increased by a lot because it was 16.47% in January. And the chances are that it's going to go higher because the petrol subsidy is going to be removed at some point, which looks likely that it's going to be very soon because the government again is struggling a lot to finance its budget and and would probably take off the subsidy, even though it's called another name now, but whatever it is, the PPPRA says the actual price should be around 212. So there are other things driving inflation, and I think it's not even some things I explain to anyone because they are just the normal basic things that are driving the high inflation. I don't think there's anything you buy now that is probably not more expensive than it used to be. So as with inflation, is just even though the data and whatever has been given also lacks the time, but for it to be as high as that, you should know that it's probably higher in true sense of it. Because the things affected, you talk about fish, you talk about meat, you talk about oil, you talk about bread, you talk about cereals. Then you now look at it and what is it that people can actually eat. So, for instance, if you take the fish meat as an example, let's say both are substitutes. At least if one is more expensive, you should run to the other. But if both are increasing, then you're in trouble. So, right now the inflation is high. It's not helped by all the other factors, and there are things we can feel because anything you ask, whatever price you ask from anybody now, everybody says, this is it, and you can see clearly the inflation is high. So what can you do amidst this kind of environment? I think it's to look for investment opportunities that help you edge against inflation. Now I will probably leave the traditional ones. Probably Debo will talk more about, I don't know, about the traditional methods of edging inflation. I know investment, when it comes to investment, talk about real estate as a major edge against inflation, the equities market as well, the stock market also. Traditionally, they have a positive correlation with inflation. But I will also want to talk about something probably, what are the things that are increasing in price? Probably, let's say um, it's something that somebody sells that is increasing in price, which means that at least we can all agree that there's something that will probably not have a positive correlation with inflation, and that is salary. You know, that most likely will not move at the same pace as inflation. But what people sell and what people, can easily be adjusted. So the private equity space, the private debt space is probably one to look at beyond the traditional methods of hedging inflation. What idea does somebody have that you can finance? Or what do you think you can do that you can finance? That you can get the required, that can be able to generate enough growth over time. Because whatever it is, let's say for instance, you have somebody who sells probably one bag of flour. I'm just saying, just an example. and you know that if you invest in this, you can increase it to probably 10 or 15. Uh, so flour will definitely increase with inflation. There's no, whatever happens, it's going to rise to meet up, maybe not in same proportion, but it will definitely rise. And so will every other thing also, which has to do with, so those things will rise. If you invest in such opportunities, the chances are that you'll be able to earn returns, that will be able to move at least at the same pace as inflation. So that's what I just want to talk about, the private equity. And it's not something, let's leave the word private equity. It's just about looking at opportunities around you, uh, where, we have to, you just look at the opportunities around you. I don't know what those opportunities can be, but you just have to look around. Maybe it's just somebody, a younger brother, or somebody who is, a friend or whatever business, I know there are still challenges. Due diligence is important, but I think it can be an opportunity to edge the inflation. Um,
Thank you, Philip. I have a comment from Ifeanyi Patrick, but I won't read it yet because it's very, very interesting. It is an interesting one. Debo, do you want to touch briefly on how? So, Philip has talked about the opportunities. I can't take an opportunity if I don't understand myself. And it touches slightly to what Ifeanyi Patrick just said in the chat room, which is the government hasn't done a lot of things. But I've found myself in an economy where it feels like the government hasn't done a lot of things, or where I feel I've not seen the impact I want to see in the market. But I still need to make some decisions. I still need to take investment decisions because that determines the quality of my life in my future in a 5 years, 10 years, 15 years from today. I can't depend on retirement. We've seen our parents' pensions, we've seen the mess that happens in that realm. And we still have to think ahead and plan ahead. Now, how do I look at myself as an individual in this kind of economy that I sense is not working well and still assess my ability to make some sound investment decisions? What should I ask myself?
Yeah, that was a good point from Patrick, I think, and I'm looking at what can I do as a Nigerian in diaspora, or even a Nigerian living in Nigeria. Of course, for any investment or as an investor, I am a big supporter of diversification. That's one area, even though, yes, I follow a lot of Warren Buffett's principle. In his opinion, great investors do not diversify. I don't, maybe I'm not a great investor yet, but I think diversification helps. And Philip has touched on some of those areas. Real estate is a very good area to hedge against inflation. And of course, there's appreciation to the land and things like that. So real estate for me is a good one. And that is one area where, yes, we need government to help in a lot of things, but there are some personal investment decisions that we can make without relying on the government, except in the area of real estate is, making sure that government doesn't come in the future and take your house, because, so again, the impact of government still comes into that when we're talking real estate. But yeah, so far, what we have seen, real estate seems to be like a good investment opportunity, as well as the stock market. Interesting to know that even as bad a year as 2020 was globally, Nigeria stock market still ranked as one of the top 5 or top 7, which was a very impressive thing to know. So it shows that we are really making progress in some areas, and I think that that's a good opportunity, even for Nigerians in diaspora. You don't have to be home to invest in the stock market. Now we have a lot of investment outfits that have a mobile platform where you can manage your investment from anywhere in the world. So that's really a good area that I think is something that opened up and we can take advantage of. As well as, but again, in everything, when I'm looking at investment, yes, it is important that you do your due diligence, you understand what you are investing in. That is a critical aspect. We work hard for our money. You don't want to lose it for anything that doesn't even make sense. If that, I can say that. For example, you do hear all sorts of investment opportunities. If it looks too good to be good, just know that it is something that will likely drain your money. A lot of those type of opportunities, they sell you the upside. But one thing we know with investment in terms of risk is if the upside is high, just know that this downside is equally as high. So, and most of the time, a lot of these platforms where they come on YouTube and sell investment opportunities, they will not talk about the downside. And at the end of the day, a lot of people lose money. So due diligence is important, like you mentioned for me.
Okay, thank you for that. So I wanted a bit of, I know when we invest, there are certain investment managers that will do things like profiling, where they want to know what your risk tolerance is, age, what financial stage are you in, portfolio diversification, and all of that. So I wanted you to touch base a bit on it. Like if I wanted to do my personal investment profile and I want to understand how and where I should invest, what are the factors of my life I should consider? So, for example, you want to do mutual funds. Sometimes you're asked to consider your age. You're asked to consider, okay, what's the return? What's the rate of return? What does that even mean to me as an average person? So, I wanted you to also touch to talk about that briefly.
What is important, especially when you have to invest, at this stage, you have to assess your risk capacity and your risk tolerance. They are different, and they can be based on, probably the stage of life they are in, your age. There are some things that a retiree will not be expected to do. Some investment opportunities that could be attractive, but still not something you expect somebody at the latter part of life to take. So right now, we encourage young people to take a bit more risk, especially because the fixed income market, which traditionally has been the market everybody runs to in Nigeria, because it gives some acceptable level of return, has been down. I think right now, probably the average rate across banks in Nigeria will probably be between 1% and 2%, which is too low. We talked about how high inflation is already. But again, you still have to evaluate your risk capacity. Capacity means how much do you really have to invest, and how much you have to spare for to invest in some of these other opportunities, and then you look at other options. Now, even in the stock market, it's not every opportunity that should be attractive to everyone at every stage. There are some companies that normally we say are in a mature stage, they are in a stable stage, which when you invest, aside from the fact that they have the capacity to appreciate in price, they also pay dividends because of the stage they are in. While there are some other opportunities that probably they are just once in a lifetime, So it depends on what stage of life they are in. Your risk tolerance has to be based on, what is it that is your objective? Is it consistent with what you have to invest, and is it consistent, with the risk in the market? So, for instance, you would have heard that GameStop, AMC, and all that in America, they moved really high. But again, some try to take advantage of it at the wrong time, because such investment, if you don't hear at the very start, even though they skyrocketed, a lot of people still lost a lot of money. So I don't think it's an investment for everybody. There are those who are the high risk takers. You probably would look for such opportunities where a company just moves and skyrockets. But I think for the most people, the risk assessment should be just that you look for opportunities, companies that are stable, relatively stable. Every company can have its challenge, but you look for companies that are stable. In Nigeria, for instance, you talk about probably a Dangote Cement, you talk about an MTN Nigeria, you talk about companies that you can see the business they are doing, you can see how stable they are, and you can see how the growth has been over the years. Just examples, but I'm just saying that regardless of where you are, your age determines what you, but relatively, if you are not a high risk taker, then you have to consider companies that are stable, relatively stable, which means that even if there's a downside, it won't be so much, it won't have too much of an impact on your. So you have to consider all that. your risk capacity and risk tolerance. You have to assess both before making any investment.
Okay. Thank you, Philip. Dave, sorry.
Yeah, I think Philip touched on practically all the points I would have, and again, that is why you don't see investment professionals give generic advice in terms of investment, because they want to profile individuals, know where you are in your financial journey, and you want to know what is your risk tolerance, your risk appetite, like Philip had touched on all those points. So I would say yes, factor all those in. Yes, there's information out there on everything. You can pick a stock, and even a stock that is performing could mean different things to different individuals depending on where they are in their journey. Age is important, like Philip said. Younger people have more opportunity to take risks than someone close to retirement who should be more concerned with capital preservation. So I would say, yeah,